are connecting. I'm going to share. Just a moment. Okay, we're starting. Okay, everybody hears me. Give me a message, please. Please chat with me here on WebEx. Hello. Oh, I see some people are. Okay, let's see. From Trish, I hear you. Melanie, hi. From Elise, I can hear you. Okay. Anybody else? Anybody else? I guess everybody is here. Okay. We're gonna. Oh, Chesky. Hi, Chesky. New name. Okay. Okay. I'm waiting for Serena, but we missed you last time, Serena. Okay. Let's start. Okay, with QuickBooks. We click QuickBooks. It opens up. And we click Home on the top left. Home brings you to such a page, which is, I'm maximizing it, and it shows you the most basic of things that we have to do with QuickBooks. Okay, last time I showed you how the inventory increases when you do a bill, right, when you enter a bill. And then when you sell, it reduces the inventory. Okay, you write an invoice that is selling to a customer, and the customer is taking away inventory, so it reduces the inventory on hand. Now, in order to look at inventory, you click here where it says the top right smaller part is items and service, right? The items that you're selling, actual items, and it could also be service that you're providing a service. In such case, you don't have any inventory. I click this, I will see we did last time, right, item number 2301, stereo system, inventory, and on here we have 3. Now, here, these column headings, type, description, etc., if I right-click on here, it will tell me customize columns. You see here? Customize columns, and I could, on the right side is the chosen columns that I want to see. On the left side is available columns that are available, and I can add them. For instance, if I have here purchase description, right? And here is description, sales description. So if I want to add purchase description, I just click it and I click add. Now it goes to the bottom of the list of chosen columns to see when you open up the item list. And let's say here, if I click cost, I could remove it. I click the button in the middle that says remove, and it goes off from the chosen. I will not see it anymore. And instead, I will see only what is remaining here on the right side, chosen columns. Now, I can move up and down, meaning if I click any, let's say, purchase description, I can move up, and it goes in whichever order it is in this chosen columns area. Okay, so I put in purchase description. I moved it 3 away from the right, and I took away cost. You see this column cost is here. Cost is what it costs me. Price is what I sell it for. So I took away that cost. Now if I click OK, you will not see cost. You will see description, which is the purchase description. You will see here on hand. Oh, purchase description. I'm sorry. This is a purchase description. Sometimes you want to see both descriptions. Then you have here price and no cost, right? Well, I think it's important to see cost and price at the same time. So this is just an illustration. On hand is also important to see, in my opinion. Some other things are not so important to see. So I'm going to do back. Okay, there's a question here. Notice, sorry. Okay, Serena, I am here. Terrific. Okay, very good. Okay. So if I click over here at the top any of the column headings, I right-click on it. It says customize the columns. I click again, and I want to take away the purchase description, remove, from the right side from the chosen columns. And I want to add the cost, and I want to edit, and I can move it up. So it's next to price and cost. And, oh, you know what? I'll move it up. Okay, I'll move it above on hand. So it'll be to the left on the thing. So here we have it. And I have here, cost is here on hand. And the price is here. Okay, so we assigned, and we put it in. Now, the same way that we put in here the item list, you see this diamond here on the top left? That says that the list is sorted. If I click on it, it will remove this diamond and will return this list to original order, which is usually sorted on name. Okay? So, I have here a list of all my items. Now, let me explain something very important. I'll click any inventory. Let's say the 2301 item. I double click, it opens up. You see on the bottom there's two half sale information and there's the purchase information. The purchase cost is $40, which is $140, which is usually the price that I buy it for. And the sale price is $160, which is what I usually sell it for. Now I have here a tax code. Means is it taxable or not? Is it a taxable sale or non-taxable sale? So if it's a taxable sale, it will charge tax to a customer who purchases it. But a very important thing is to add income statement. Meaning, this $160, where does it go? To which? Okay, there's something called chart of accounts, which is meaning it's a list of all your accounts that you have in the company. Meaning, revenue, what you sell it for, sales, the same as revenue, expenses, telephone, electric, rent, automobile, these are all expenses. That's a chart of accounts. So the accounts are grouped into income accounts and expense accounts. And then you have other accounts like a bank account, which is not an income and not an expense account. It's just where you keep your money in. It's not an income. It doesn't produce. Now, if you sell something like this item and you sell it for $160, so that $160 goes into this account. Goes into earned revenue. I could call it sales. I could call it revenues, a lot of things. Now, if I click this drop down, we see here that this company happens to have a lot of different income accounts, maybe too many. So if I click up, I see, wow, so many more income accounts. Okay, if I click down, it shows me much too much. This is just a sample company. I wouldn't have put in so much income here. So, but anyhow, this item, when it gets sold, gets put into earned revenue. That's an account. Now, That's one of the accounts. Okay, there's a question here. Melanie, I have an unrelated question to this topic. Okay. I made a new account on QuickBooks and put information in it, and I locked it with a password, and I forgot the password. Maybe you put a password on QuickBooks? Yes or no? Could you answer me? Yes. Yeah. Okay, I don't think I can help you. I think in the company that makes QuickBooks may help you for a fee. That's one of the hazards. You have to put in a password that you can remember, or else you're like stuck. You may be able to browse the web. You know what? Okay, if you call me, not tonight, but a different time, at 718-871-4146, and like 11 o'clock in the morning is good, tomorrow, I may be able to help you, but again, could you chat with me where you're located if I have to come over? Oh, 1 minute for Melanie. On that specific account? Not on the whole QuickBooks? I thought you said yes. I thought you said yes, Melanie. Not on the whole QuickBooks. So how do you put an account? My question is, how do you put a password on, let's say, this? There's no item. You can make it inactive here. You see this item is inactive, meaning I don't want to sell or purchase this item anymore. That's what you could do. That is a simple thing to fix. But is that the password? Is that what you mean by password? I don't think so. Sorry, I got confused. So what is your question, Melanie? Sound there's a lot of background noise behind you. Behind me? Let me turn around and see it. That's my air conditioner going. I'm sorry, Melanie. It's quite hot here. Maybe you'll get used to it. Okay, just chat with me and tell me what is the problem with an item on the item list. The name for item is also more commonly used as inventory. But since QuickBooks has items that are not inventory, for instance, let me show you. Okay, so we took care of this. So let's just finish up this thing. The item account, meaning where this $160, when I sell it, which account it goes into. This, so I have to put an income account, not a different type of account. Now, on the left side, where it says purchase information, I have to put in a COGS account, right? You see it? And that is what it costs me to buy this item. So, and therefore, when I sell something, what's happening? I'm getting money, $160, but I'm not making the full $160 on this item. It cost me $140. So really, I'm making $20. So really, the cost of this item is an expense, right? And in accounting, it's called not an expense, which is like rent or automobile. It's cost of goods sold, the cost of the goods that I sold. And that goes in to a income statement. In accounting, you have an income statement, and I'll show it to you soon. So let's say, for instance, I sold item 2301, and on the bottom I could do a report, and I get quick report. I want to see everything that happened with this item. That's what quick report is. It's Control Q. If I click it, I get a report. Look at this. I have a bill with this item. I bought 5. Remember last week we bought 5 bills? And look at this. If I double click when it's Z to zoom, I could zoom into the bill. I double click And it goes into the bill, and I see that I bought item 2301, which description and the quantity of 5. And the cost was 130. Remember? So 130 is the cost that on this bill, even though I have the normal cost is 140, but here it's, for this time that I bought it, it was a special on 130. So let's save and close. And here I have an invoice, so it becomes a -1, that I sold this on June 24th. And it gives me, and then I have another invoice -3, right? And then I have a bill that I bought it again on August 25, 4 pieces. If I click, let's say, the first invoice, the upper invoice, -1, right? I click it, and I see that I sold it for 161. See the quantity? Is 1 on this invoice, meaning, so when I sell it, it goes off of my inventory. It reduces my inventory. Then the second invoice, I have here 3 quantity, and I sold it this time for 150, right? Okay. So let me show you also, and then the next bill is I bought 4. You see, here's quantity 4. Cost is 140. And then I said keep the cost as 140. So here, this quick report, see inventory item quick report, shows me what is the history of this item in my sales and my purchases. And now it said total inventory is 3, because that's what total on hand as of. Okay, so that's what I have. Well, there's a question. I can call from work tomorrow in Manhattan. Okay, very good. Call about 11 a.m. because we'll work it through, okay? Fine. Okay, so this is a quick report for how many we buy and sell. Now let me close this report, and let me get another report, which I'll show you. This is a report on all items, right? On all items, and let me see here. 1 second. Here, in project item profitability, which is a very nice report to have. So this is a special, and it's on project, and it's item profitability. Let's click this one, and we get here. Okay, so it shows me, you see here, that's 2301. It costs me $1,120, and I sold it for $1,520, and the difference was $400 that I made on this item, which, okay, now let me show you something. Every single report has on the top left, has here a modify report, and I could modify this report to show me other things. If I click it, you see here, add subcolumns 4. You see here the difference, and then percent difference. If I click this checkbox, and then I click OK, it's going to show me the percent, not only the dollar difference, and not only the actual revenue and the actual cost. I'm going to click OK, and now here, I got a column percent difference. And so this shows me item 2301. The actual cost was $1,120. So it's actual revenue, the dollar difference. And then 35% is the percent difference. Maybe I'm marking it up too little. Or I don't know. Because other things here, right? I have here 40% on item 1456. Oh, 1456, that's a good thing. Let me see if I can put in the description. Besides the number, I want to be able to put in the description so I know what's 1456. So let's again click Modify Report on the top left. And no, it's not letting me, it seems. Not letting me put in, which, in my opinion, is not too good. So I click Cancel, but I'm keeping the percent difference. So, when I put in an item number from now on, I'm not going to put in 2301. I'll put in a partial description on this item, like here. AC 5000, King Socks 238, warm plastic. You know, I put in a number, but I may also put in a small descriptive thing because this is not too good. Now, let me show you any report. If I decide to make it, one second, let me show you. Okay, I can widen it. You see how I click this little diamond next to each column? And the mouse becomes a two-way arrow. That says that I can move it to the left or right. And if I move it to the right, it asks me, do you want to widen all the columns the same size? So I say yes. And you see how it widens these columns so that it looks a little nicer. Okay, so that I could widen or I could narrow. I move any of the columns to the left. You see how the dotted line becomes? And I move it, and then again, set all columns. And if I say yes, all of them become more narrow. Now, okay, so here I see percent difference, going back to that 35% may be, on my business, may be too small of a difference between cost and revenue. That may be. So, I have that. Now, let's click again Modify Report on the top left. And here we have Display. Now we have three other tabs that I can go to and to change things on the report. Now one thing, on this tab, on the Display tab, it says, what are the dates? All, meaning I want to see every single transaction. Now, if the company is in business for 1, 2, 3 years, they happen to have a lot of transactions. And I don't have to see old data. So instead of all, I click this fiscal year. You see? So it's going to just give me the year data and nothing else. So if I'm in business for 3 or 2 years, I will not see the action or what happened before then. So I click this fiscal year, and I click OK, and take a look. Now 2301 changed. Before it was $1,120, now it's $520. And here the revenue, let me widen it. Yes. Before the revenue was more than 610, something like 1,500 something. And the difference was in dollar amounts, not $90 but more. And now my percent difference is 17%, which is not very good. That I lately, when I sold and bought it, the difference between the cost and the price was much narrower than what it had been in years prior. So that's something that I have to be aware and do something about. Either raise the sell price or try to buy it for less, because I can't work on a markup of 17%. Okay, so that's what I wanted to show you about item profitability and about modifying reports. So let's modify this report again. Modify the report on the top left. Now I go to filter. Now here I can say, or I can click here item on the left. It says choose filter. I click here item, and here it says which items, all sale items. But if I have a lot of transactions, it will fill up many, many pages. I go down here and I choose only 2301. I don't want to see all the items. So I click OK, and it's only going to give me 2301 for this year. You see it says January through December, and it will give me the same data. So now, very interesting. If I click on the 520, it's going to show me all my invoices. See 520? And the cost. So here on the top line it says 130. If I click this invoice, actually, it says 160. Because 160 is my sell price, and it shows me here the amount that cost me 130 on selling it for 160. Now if I click on the invoice, the second line, again it will show the 3 items, 390, which is really 130 each, but I won't see that on the invoice. On the invoice shows me the sell price, because the invoice goes to a customer. You see, I have 3 quantities for 150. So behind 150, the cost is 390 or 130 per one. So let's go out of this. So this is item actual cost detail. Now, if I click on the 610, the revenue column, will again show me the 2 invoices, same 2 invoices. But now it will show me the revenue amount, 160 on the first line, and here it says 160, because that's what I sold it for on the invoice. And here, 450, I click, right, 3 items, each one 160, gives me 450. So you see that now it's showing me, now it's showing me the revenue side, right? Item actual revenue detail here. So it shows me, if I click actual cost, it will show me the invoice. It will not show me the bill, because bill is not what I sold yet. Bill is what I bought, and I have an inventory. I did not make a profit on that at all. Right? So really only what I sold. What is the cost of what I sold? That's the point. Okay, now let me click the difference in dollars. Right? $90. Now it gives me each invoice 2 lines per invoice, right? Invoice number 31 has 2 lines. And if I click either, I'm going to come to invoice number 31 here. Right? You see invoice number. And it will show me for 160, and I bought it for 130. Right? Okay, now on this second invoice, invoice 35, here, let me right-click on this. That's another thing. I can increase the font size. Now it gets a little bigger. Okay. I can take out the memo field and the name. Okay, so now we see it a little bigger for those people who like that. So here, invoice number 355 depends which line. There are two lines, because one was the invoice with the sale price, and one was the invoice with the cost price. So I see on this invoice, so that's so the difference is $60 that I made on this invoice, and on the other invoice, number 31, I made $30. So there, that's the $90 that I made on selling the two invoices, and it cost me cost of goods sold, right? So therefore, my profit was $90 on this item, okay? So that's the point, that I made $90 on these two. Now, if I click the 17%, it doesn't let me. So actually, when I click the difference, it'll show me the one invoice twice, and each number is different, the cost and the sale price. Okay. So that is something with item profitability. Let's close this report. Any questions? No questions. Okay, everybody's listening quietly. Okay. Let's see. Okay, so here we have reports on items. So let's close out this item. Oh, hold on. Let me show you something else very important. Okay, if, one second. Okay, so if I right-click on this line, which is 2301, I'm going to get a quick report. And we have the bills and the invoices, right? If I modify the report on the top left, here is slightly different. It has more to it than the item profitability report. And let me show you. Here on the left, I can pull down this slider, and I can choose. Let me show you something very nice. I can show you. One second. Let me see. Try to find it. The sale price. Right. I see the sale price. I'm looking for cost. I don't know if it gives it. Let's click amount. Let's click balance. Oh, okay. Paid means not what it's paid for, but if it was paid or not. So here I have that. Billing, I don't think I have cost here. Okay, so let's create a few columns. Let's click OK. Okay, you see here sale price. Oh, but this is fine. Because here on the invoices, but this is only inventory, not sale, you see. This invoice, I sold it for 140, 160, or 150. But the next bill, 140, that doesn't tell me that I sold items on this bill. I might have had in stock. You understand? If I had 5 at 130, and then I sold 4, then I really sold the 130s, not the 140s. You see, that's the other problem, an accounting problem. When I sell on an invoice one item, which one did I sell? The one that I bought for 130, or the one I bought for 140? And that has to do with my profit, right? So there's different ways of evaluating inventory that I sold here on this invoice number 31, I sold one. What did it cost me? If it cost me $130, then I made $30. If I sold it to 140 pieces, then I made only $20. Same thing with the invoice that's number 355. Let me right-click this and increase the font size. Click OK. Say all the fonts. Okay, I can take out the memo field. The name, I could, okay. You see? So here, if I sold for 150 each, right, did I sell the ones I bought for 140 or the ones for 130? Again, so that's how the question is in accounting, how this happened. What really happened? So do I average it out? 140 on 130? Okay, question. Maybe I'll email Sarah for this class recording as well as last class. Okay, thank you. I have to bug you, but my call just failed, so I can't hear anything anymore. That is terrible. Okay. Try sign on. Let me. 1 second. Okay, I'm chatting with Melanie that she should try to sign on again. Okay. So you understand? So therefore, if you sold a $140 item, the same thing, then I made only $10 profit on this $150 invoice. So that's the question over there. So we get back to okay, so that's this item. So let me open up again. I was going to show you something. Okay, so we have here these items. Now let me see what happens. Our income statement. We have here reports. Now, if you click reports, you can go to report center. That gives you all the reports. If I click it, you go, it takes a minute, but you go to all reports. Now, all these reports are the same, identical, but they're just in a different format as this drop-down list. You see here it has company and financial. You have your company and financial. You have customers. Here you have customers. Next, on the left. Sales. You have your sales. And also, if I click company financial, I get all these profit and loss. You can see it over here. Here's the profit and loss. Here's the income and expenses. And so forth. So you're getting all these. It's just a different layout, and some people like it better. So if I click here, standard, now my net profit for this day, this month to date, is 0. So I didn't sell this month, the first day, anything. What if I do last month? I click last month. Now it shows me income. Here's the income. Here I made 3,000. Let me increase the font so people can see. Here I made 3,081 and a few cents. Here's retail sales. Total income is 3,800 plus. Now it's cost of goods sold. 640. If I double click on it, zoom, right? I zoom onto the number. I would get, you see, here's a bill. And this bill, remember bill 355? This bill 355, aha, here it says $450 because I bought 3 items. You see? Each 150 is $450. But what did I sell? On invoice 1 second. On invoice 355, let's see. This was 450, right? I sold. So why does this show 390? Because this is showing cost of goods sold. On this invoice, that's 355. On August 25, it shows me 390, and when I click it, it shows me here 450 because the invoice shows what I sold it for. But I sold 3. But the cost of these 3 was each one 130, and it was 390. So on this invoice, QuickBooks used the items that cost me 130, not 140. Do you see? So therefore, this is my cost, 390 on this invoice. Do you see? 640 included some of my older and cheaper items. Okay, so here we go through the profit and loss. The total income is $3,800. Cost of goods sold is $640 because when I sell, I have to pay, have an expense of what the item cost me. So therefore my gross profit is 3160 point whatever. That meaning after I'm paying what this cost me, I made a profit. Then, there's a question. I'm watching the presentation. Thank you, Melanie. Okay. I don't have my access code. Melanie says, okay. Nope. So I have a gross profit of 3160. Now it shows expenses that I had for electricity, for travel. So that's another 326. Comes off from the 3160. Leaves me with 2833 and a few cents. So that's net income, right? So in a profit and loss, really it should be called profit or loss, because sometimes the company has for August the profit, like we had, of 2833, but sometimes the expenses and the cost of goods sold is more than income for that month, and therefore we have a loss. So it's called, it should be called profit or loss, but it really is called profit and loss statement, and others call it income statement, because usually you're making income, not loss. So really there's 2 parts of a profit and loss statement. It's called P&L statement, profit and loss. P&L. What you gross sales, total income, what you had for this period, which happens to be, this period is August 2010. We sold 3,800. It costs us to sell, to make this 3,800 costs us 640 in material that we sold, in items, and left us with a gross profit of 3,160. But we also had other expenses, electricity, travel, etc. A business has really a lot of other expenses. So, and of course, this month, it costs us $326. So we left with $28.33. So this month, now, we could change on the top left, not last month, but we can do this fiscal year. It will be bigger numbers, but the same idea. We have bigger numbers. It's showing you from January through December. And it shows you total earned revenue is this. And then, but then you have really on the bottom, total income is $24,800. Then the cost of goods sold is $26,400. And we have a gross profit of minus $15.84. So here, this profit and loss is really a loss. But the name does not change. So we are on a loss. And then we have additional expenses, bank fees, electricity, etc. And everything adds up, all the expenses add up to $7,400 plus. So then we come out to a loss of $9,000, meaning it's a minus $9,000 for the year. So August was a pretty good month. But for the year, it was minus $9,000. So that's not too good. But it shows you here a profit and loss statement. So now, let us see last year. We looked at this year. Let's look at last year, last fiscal year. Right, we have January through December 09. We don't have much of anything. Because, hold on, okay. We have total income is $38,000. Cost of goods sold is $3,600. So we have $191 gross profit before other expenses. And you see, that's what accounting does. It wants to separate the different expenses that the business has, meaning the cost of what they're selling, from the other expenses that might be rent, electricity, phone, etc. So therefore, the total income shows our figure. Then we get minus the cost of selling these goods, gives us a gross profit. But gross profit is not net profit. Because from the gross profit we take off expenses, and therefore we come to a net income of minus $950 plus. So again, that year was not too good. But okay. But those businesses, we hope, had a net income. Okay. So let me show you, in case you want to see now, just like you did last year, right? And I could do this month to date, which is nothing. And I could do this fiscal quarter. A year is divided into 4 quarters. All right? So, you see, that quarter we made a net income of $4,200 plus. So that was a good quarter. I could also change it here. I could change this 07, let's say, to an 06. So I want to see June, July, August, September, 4 months. I can make my own dates over here. And either I click on this report or I click refresh, this button, and it gives me, so here we had a minus $10,008 because somehow we had more expenses, additional expenses. Okay, so we can change the date and say any from date. We could say from July 25 to September 1, or any date. We have the from and to, and we can change it. Now, also, if let's say we have 4 months, right? June 1 through September 30. June, July, August, September, 4 months. If I click here, not totals only, if I click here, months, it gives me the profit and loss side by side of June, July, August, September. Right? Well, September is not just started, but I can break it up. So September has nothing. So really, I could take it out. We had here certain expenses. So I can make this the 09. I can make to an 08. I click refresh. So now we only have. We have here. Now you see it all. June, July, August, and then the total of all three together. So I could modify reports different ways to be able to see side by side how I was doing in different months, in different weeks. You see it says August 1 to 30. Why? Because if I click here the date symbol next to August 30, I could do August 31. And then I'll get August 2010. Since I left out part, even one date, but I left out part of the month, so it doesn't show me it as July 10 or August 10. So here in July and August, total income was, so July was very good, August worse, and June was falling asleep. But the total is on the extreme right. Total of, for all these 3 months. So as I go down, I can compare what happened. Why did I have such a big difference? And I can see, here I made $15,000 in July, which is very unusual. Very unusual. Okay, so I can analyze these things. Then cost of goods was here. And you see the differences. I can analyze these things. And then I can analyze, let's say, rent. Well, rent stays the same. Mostly, I guess. Let's see. Okay, so you see here, travel. Travel is a thing that changes from month to month. I can analyze and see, oh, this month I spent more on travel. Why? And then I could click or zoom into this $75. Well, if the month happens to have very unusual travel, high amounts, I could say and see, I could see why is it that I had such a high expense of travel in this month. So I could zoom, double click it, and here I see a bill. Okay, I see here a bill, and here it says item, and here in expense section, I see travel. And I could see why, okay, there's not much money, but sometimes if it does have a lot of money, I can see, oh, travel, this is the reason why this month had very high travel. Okay, So, let's say like June, I see cost of goods sold is 15,000, and I didn't sell much of anything. So I can zoom in on here and see why and what. Okay, so this bill of 10,000. I could click, and I put cost of goods sold. And really, it should not be. A bill doesn't have cost of goods sold. Okay, I guess so. I don't know what, but you see that here is a mistake. And it is $10,000. For some reason, it is a mistake. So that's how I can analyze it. Now, there's another, okay, you know what? I'm going to ask questions to the people here. Since this is the last session, I think, yeah, it's the last session for this class, I would want, if anybody has any questions that I could answer, chat to me and ask anything you like, and I'll try to answer it. If you don't, we'll go on to something else that we didn't. Okay. So that is no question. Okay. Now, besides profit and loss, there is another report that is very important. Let's close this out. We close it. We'll close this. I don't like. Okay, we'll close that. Okay, let me show you something else. You see, here in QuickBooks you have this view, open window list. See the first one? You click it, and it shows you which windows are open in QuickBooks. We have the item list. We have this inventory item quick report. That's the top one. We have the bottom, which is home. So I can click on home and go to it. I can click on item list and go to it. So these are the open windows. And you see when you see view, you see the check mark? The check mark means it's active. Open window list. It shows me all the open windows that I have in QuickBooks. So if I click it again, it'll turn it off. Click it again, I don't. So you see, there's no check mark. If I click it again, it is. So it takes away some of the space on the screen, but some people like it. So here, if I go to the edge, you see a two-way arrow. And I can move it over, or I can move it extreme to the left to really make it small. So that's the thing about open window list. Now, okay, that's that. Now, what I recommend is if people have, at the end of the day, if they close down QuickBooks and next day they're going to open it, I recommend that you close all your windows, all your things, because the next day when you open up QuickBooks, it's going to open up the same windows that you had open when you closed it. If you just close down the program with 3 windows here, the next day, next time you open it, it's going to open these same windows and reports and whatever. Now, that doesn't mean that you need these reports and these items the next time. Because it will take extra time to start up Windows. When you come back in the morning, you're going to have to wait longer. Windows is a very slow program to start up. And for those who use it, like you know that. So if it's besides just plain opening up, besides that, you're going to also have to wait till it reopens all the windows that you forgot to close. It's going to take a little extra. Okay, so therefore, at the end of the day, close all your windows. Now, let me show you something else. Okay, here's chart of accounts. You see, Control A, chart of accounts. This is a list. Chart means a list of all the accounts that you have. Now, here are banks. This company has too many banks, but okay, I have bank accounts. A lot of companies have 3 or something. Then you have, and it shows you on the right the balance of, okay, these accounts. What's the question? I have to have another question. I will call you tomorrow with emails here about a recording. Thank you for all your help. It was a great class. Thank you very much, Melanie. Sorry that you had to leave. Okay. Okay, so here's the chart of accounts, meaning a list of all the accounts that this company uses. Now, expense. Now you have here accounts receivable. Also too many accounts receivable. Accounts receivable means if a customer bought from you items and did not pay, then that is the amount accounts that are receivable. Accounts of customers that have yet to be received money by the company. So that's accounts receivable. That is an asset, but it's better to have money in your pocket than to have an accounts receivable. But you can't always help yourself every time. So that's accounts receivable. Then you have other current assets. Let's say if a person has inventory, right? They bought something. They wrote a bill. They bought items from their suppliers in order to sell, and they paid money. So money went out of the bank account, and it went in for that same amount into inventory assets. So meaning, if you bought something for $1,000, the bank account went down by 1,000, and inventory asset went up by 1,000. Meaning you didn't sell it yet. It's just an asset in your business of inventory, not of money. That's what you did when you bought things. So here we have an inventory. Our inventory is 3,200 plus. So there are other assets that you may have. Then fixed assets is something we'll get into. Now we have accounts payable. Accounts payable is the exact opposite of accounts receivable. Accounts receivable is what you should be receiving. Accounts payable is that you have bills and you bought things, and you're going to have to pay accounts that this company has that should be paid. Accounts payable. So that's what accounts payable is. And other liabilities. Liabilities means that it's like a thing that you owe. Then you have a credit card. That is also a liability. And that's because if you bought things, it's that the store got paid, but the credit card, bank, Visa, did not just get paid. So it's similar to a payable, but this payable is payable to the Visa company. So that's another liability account. Then you have other current liabilities, which are whatever, other stuff, that are long-term liabilities. Now you have equity. Equity means what you, as the owner of the own in the business. And then you have a bunch of equities, which also too much. And then you have income. Income means what you are making. It's what you own in the business. It's also what you made this year. And here is cost of goods sold. That it's now income and cost of goods sold and expenses goes on the profit and loss statement. And it shows you for this period, this year or this quarter or this month, what you made income for this year, cost of goods sold, what the cost was for what you sold, not for what you bought, but the cost that it cost you by making the money. Then you have other expenses like taxes or electricity or rent, telephone, car, truck, professional fees, legal, etc., payroll. Okay, all these things are expenses that go in for this year. And that's that. So this is a chart of accounts, a list of all the accounts that the business has and that they use, and shows how much money was used for electricity, rent, travel, automobile, hotels, etc. Cost of goods that were sold, and receivables, payables, and that. That's the chart of accounts. Okay. Now we have also, okay, hold on, you have employees also, and that if people work for the business, for the company, then you have employees also. Then you have banking. Okay. Right. I showed you about the register. No questions. Or reconcile. Okay. This is a pretty difficult thing if you don't know how to do it. Let me show you that. Yeah. You reconcile. For this account, when you get a statement from the bank for your own personal or for business, you have to reconcile, meaning what the bank statement says should be equal to what you wrote down on your own judgment, on your own calculations. So, but not very often it's not. So when you get a bank statement, you click which bank account it was. Let's say M&T Bank, and the statement date is August 31, and the beginning balance was this amount. It could be any amount, but it is August. The beginning balance, meaning on August 1, what was the balance in this bank account? And that is the same as the ending balance of July, right? Whatever the bank had the last day of July, it has the first day of the next month, August. So that's how Quickbooks knows what the beginning balance is. And then you look on the bank statement and you see what the bank said was your balance at the end of the last day. And you put it in and you say it's $5,000. And then you click OK. And here you get on the left side all the checks and any money that went out of the account. On the right side you get all deposits and anything that went into the account. Now, very often, and you look at your statement and you go through, let's say, all the checks and other minuses that you have on the statement. And you see, is it here in QuickBooks? So you see a $25 minus on the check that you got for stopping a check. You had a certain check you wrote out to someone, and now you stopped it. So they charge you $25, and you don't see it here. So therefore, you have to add it, because it really did happen. $25 went out of your bank account, you have to go and you click the open windows and you click here and you open the check register. You click that, and which check register? The same one that you are reconciling. And you go down to M&T Bank, click OK, and now I opened up the register, and I see, I have to put in a minus, meaning a check for $25 that the bank charged me for stopping the check. I put in $25. But I don't give a number because this was not a real check with a number. So I could write in here, I don't have to write anything really. Let's click the edit transaction. So it looks like a check. This is $25. I have to click here. Let's say bank, bank fees. See here? I put here bank fees. That it cost me $25. The number you take out because there's no real check. It just went out of the bank. And I say which date it was. And I know the date by looking on the bank statement. So I may have a few. So I want to put the right date in, not to confuse myself. I put in, let's say it was September 1 here it says. I go back, click here. Say it was August 18. So now I have a check, not actual, and $25, and I save and close. Right? So here it is. You got to find it. August 18, bank fees, and $25. Now, if I go back to the reconcile, here, open window, I can click. I have 5 open windows here. I click reconcile. I go back, and here I have this $25. So I click it, and there goes a check on the left. So to say that, yes, this is a thing that the Quickbooks and the bank statement are the same. And as I click all the other checks or reductions or payments from this bank account, right, it goes down here and it shows me one check, $25. If I click this $2,000 one, now I have at the bottom $2,025. And it adds up all together. And all these checks and payments should be equal to all the minuses that I find on my bank statements. All the checks and all the electronic or wires or fees or automatic payments that come out of the bank account, right? And then here, I have here a deposit, right? $3,500. Right? So if I click that, because that is also on the bank statement that I get in the mail, I click, and then it should show me that here, one deposit on the left bottom, $3,500. If I click the other deposit, then it shows me $5,500. And here on the bottom right, I see the difference. Meaning the difference between what QuickBooks says and the bank statement says. So if I say, hey, this ending balance is a mistake, I put in 5,000, I can click modify, and here I go back to this beginning step, and it says ending balance, and really it's not 5,000 ending balance, but 25,000 ending balance. Then I click again to continue. So now the ending balance is 25,000. And here it's cleared. One second. The cleared balance from the bank account says 33,000. And here we put in 2 deposits and 2 checks. And if we click another check, this check of $1,000. So now we see 3 checks or payments for 3,025, etc. And we want to get the difference down to 0. That means that we have all the checks and other payments and all the deposits that we clicked off in QuickBooks. We have that exactly like what the bank statement says. Now, could be we forgot to enter into QuickBooks a deposit, right? So we don't have it, and we have to enter that deposit. We say, yeah, we made a deposit, but somehow the person forgot to do it. So that's what we have to reconcile. Reconcile means that both sides should be equal, should agree upon. So we have here a difference. When we're finished and we have 0 difference, means that we are in sync and that everything is right. And we click reconcile now, which I will not do because we didn't reconcile it the whole way, but that is the idea. If in middle we have to go away because reconciling takes quite a long time. If it's many transactions, then it could take a few hours. So I could click leave, and this means that I don't have time now to continue, but I will continue the next day. So then, how do I go? I click home, and I click here reconcile here, or I click here on banking, and I go down banking, and I click reconcile. Either of the two brings you to that screen here. Begin reconciliation, which bank account, the ending balance, the date and everything, and I click continue to come back in where I left it off with these check marks clicked and these on the deposit side clicked, and I have to reconcile. Now you have to be careful. If I'm moving here and let's say I click over here, it will put a check mark to the left, which is sometimes no good, because you didn't mean to put a check mark. You meant just to go here and to see it. And sometimes if I click on this, it will take off the check mark on the left, even if I click over here. You see? So that could, so I have to click it again. So I have to be very careful with moving around here and clicking here, because that could cause problems that I unclicked or clicked something that should not have been clicked, and I will not get a 0 on the bottom right to show me the difference. The difference means the problem. Here, there's a difference between the bank statement and QuickBooks, what they're saying. So you have to be careful here where you click. Now, it's also important to know that here's a deposit of $3,500. Now this means here was a deposit. Let's leave it here. And there was a deposit, and it might have been a few checks, right? So that's why when we go and make a deposit here, record a deposit, we have checks here. And we have to choose which checks we are going to make into one deposit. Because a deposit of, they might tell us, don't deposit my check yet for another 2 days. So we cannot deposit it. So we have to click which ones we are going to deposit now. And you see here, we have hit $35 and $2.50. So the total is on the bottom $285. So if we make a deposit of $285, what's going to show in the bank check register? $285. The bank will not know that we put in $35 and $2.50. We could have put in $35 and $1.50 and $100. So from the bank statement, when you see $285, you don't know how many checks they are. If it's 2 or 3 or more, or cash also, checks. I understand. So you just know that the total deposit was $285. So let's click here, OK. And here you see that these 2 checks came in, and you have a total of $285, but the individual checks are these amounts. And let's say you have here the date was September 1, and the bank account was not 49 cash. See, that's also a thing. Sometimes you have missing a deposit from a bank statement. The statement says it was deposited. You don't see it in your Quickbooks because by mistake you made this deposit and you forgot to look at here which bank it should go into, and you sent it to the wrong bank in Quickbooks, while really it went into another bank. So here you have to make sure that it's the right bank we put it into, the right date, and the right checks. And then you click Save and Close. And now we're going to look for the deposit of $285 in the bank account. So, because, and let's look at the reconciliation. Since we took reconcile and we continue, you see here, is $285. Since we made a deposit, and the bank told us that we had a deposit of $285, and we just forgot, when we made the deposit, we forgot to put it into Quickbooks. So that's what reconciliation means, to make sure that these 2 calculations jive and are matching. Now let's take these. Now let's go to the check register. And we click here, which bank account, since we have many. And we're going to do M&T Bank. And we look here. And here's the $285. So send in to our correct bank account. Now, here's a question. Signing off now, Elise. Okay. Thanks so much. I learned a lot. I'm glad you learned a lot. Okay, we're going to go another few minutes because we started a drop late. Okay. So here we have a deposit. The same way we have to, so look here. Here you have a star, right? Here you have a star in these column with a check mark on the top. Why is that? Because this star means you are in the middle of reconciliation. And these have been checked off in your reconciliation. Remember the 2,000 and the 1,000 and the $25, right? We reconciled that, right? Now this check mark, not a star. So a check mark means this is an old reconciliation that it did clear. It cleared from the bank. And the asterisk star is that we are in the middle of reconciling, and these ones we checked off. So if I come here and it says sort by, not by number or reference, I don't want to anymore. I don't want to do by number or reference. I want to do by cleared status. You see? Cleared status. So it sorts by cleared status. So if I go up, I have here those that are checked already, those that are and cleared, and the reconciliation ended. This is reconciled. Then I have some transactions that have a star, that are in the middle of being reconciled. And then I have some that are new transactions. They have not cleared the bank, and they have nothing in the column that shows cleared. Okay. So that's that. That's what this column means. Now, let me see something else. Okay. Now, if we want to see, I showed you statements, right? Okay, questions. What if you just kept entering without reconciling with the bank, but did it manually? How do you get the check mark on all the checks without doing each one? Hold on. What if you just kept entering without reconciling with the bank, but did it manually? Why should you do it manually? That's part of a QuickBooks power, is that you can see in QuickBooks what's cleared. If you don't know what's cleared in QuickBooks, you can keep it on a paper. How do you get the check mark on all the checks without doing each one separately? You don't. You're supposed to. That's the process. Yes, but that's the way I did it before, so I want to get the checks on. What do you mean you want to get the checks on? I'm trying to fix the mistake. Check marks. Okay. Yeah. You can do it like this. Let's see. You go in here and you click here. You see clear transaction warning. The transactions marked are cleared in your register. Transactions marked as cleared in your register are not connected to transactions unless you have to properly reconcile your account. So clearing meaning what they're telling you, you want to clear the transaction now. So I say yes. You see I get a check mark. If I click on here, I can make it a star, and it's reconciled on your reconciliation. I can make it off, and I could put a check mark here, and they give me a warning that this is bypassing the reconciliation. What you really should do, okay, but that's doing them each individually. I know there's a faster way. You know there's a fast way. Okay, so that's not what you meant. If I go to reconciliation, meaning I go to home and I reconcile, and I continue, and then I mark all. I click mark all, and it marks every single one. But that's not the purpose of doing it, because, why? Because you're going to have checks that are outstanding that didn't go through the bank yet. When you get your bank statement, let's say on the 5th of the month, for the previous month, in those 5 days, you wrote out checks that did not clear. Hold on, let me see what you're saying. Okay, but 6 is a bad mistake. Okay, good, if that's the thing. But, yeah, 6 is a bad mistake, but but you have to make sure that you're clearing properly. And really what you should do is be clearing. If you didn't clear for 4 months, you should sit one day and clear 1 month at a time, because you're going to have a lot of mistakes if you do it this way. So let me unmark all, and it takes away the checks, and I leave, and that's not the way to do it, Serena. Okay, thank you, everybody. We come to an end of our, now I can do it right. Yes, Serena. We come to an end of this session. Thank you very much for sitting in and being there and participating. Thank you, Fesky, Patricia, Serena, everybody. And have a Shana Tova, everybody. Okay, signing off. Bye. This is Solomon Cole. Wishing you a good day.